Good evening, good morning, good afternoon, wherever you're watching or listening to us from. You're welcome to Stalker Team, the Investors Channel. Today, the 12th of March, 2025. Before we go ahead, let's just make our usual disclaimer. Every information shared on this channel is for information and, of course, education purpose only. So, do your due diligence or speak to your financial advisor before making any decision. And on that note, we thank you for joining us today. We thank you for being part of this channel, for subscribing, putting on your notification bell, and also following us at Stalker Team Live on X. So please, if you haven't subscribed, subscribe to our channel, put on your notification bell, and also join our community on X at Stalker Team Live. So today, I'm going to be looking at what exactly is going on. We woke up to the early hours of trading on Wall Street this morning, and the market went ballistic, went very, very aggressively positive, after several weeks of sell-offs, several weeks of negative trading, a few days of green in and out, but we've been seeing serious sell-offs for many reasons that I've explained over and over again in my few episodes in the last couple of days. However, the rebound we have today is a bit different. It doesn't necessarily mean we are out of the waters. It doesn't necessarily mean it is now hunky-dory and the market will continue to climb very high, but it does comes with some context. And as an investor, you need to actually understand the context of what is going on so that you know what to actually tweak about your strategy, whether you should tweak your strategy, whether you should actually redesign your strategy or redesign your portfolio or your expectations for the year. Now, here is my opinion of what exactly happened today, why it's happening, and how I think you should be projecting your strategy, your investment strategy going forward. And I'm going to do two things today. I'll give the context, and also I have three stocks that I'm actually going to bring to your attention, which is the bonus for today's episode. So if you stick with me, just a very short breakdown, then I'll actually talk about three stocks, which is going to be a bit more elaborate. Number one conclusion of what is going on, because I've talked about a whole lot of the reasons why we have all of the sell-offs. So I'll be talking about conclusive insights that you can actually take to do your own due diligence, do your research, and also carve out or refine your strategy. Number one conclusion of why we have a rebound is that the market seems to be normalizing the chaos coming out of White House. However, the market is still unsure of where exactly the White House, President Trump, is going with his tariff war. You can see that there's a whole lot of bullish moves. The Nasdaq, the S&P 500, which are the major index or indices in the market, are moving very high because we had the February reading for inflation, consumer price index in the US, which actually showed that the estimate for inflation was lower than expected. I'm not going to be talking about the numbers. It doesn't really matter. What matters is that inflation in the US seems to be trending down better than expected. If you want to follow all the numbers, all the breaking news, just follow us on Stalker Team Live. You'll get all the breaking news. So, despite the fact that inflation seems to be less as powerful as it is, the market is unsure of where exactly President Trump is going. The tit for tat that we see every day seems to be continuing. Canada, also came out with a salvo today that they are coming up with additional retaliatory tariff on the US. So the market is still unsure, and that's why you see that the rebound, even when it shows very positive signs, is still not as bullish as we expected it. Although, for instance, my portfolio did almost 4% as you speak. But, if the rebound is really going to be confirmed, I expect about 9% jump. That might actually sound very out of the blues, but if that rebound is going to be confirmed, that the market is sure of what is going to happen or what exactly President Trump is going, the rebound should be stronger than this. It's still a rebound. It's something to still cheer the market. Like I said, inflation is not as problematic, so I'll jump over that. President Trump has no strategy. That is very, very clear. I'm not going to dwell into the politics, into some of the rationale that President Trump has actually outlined. I've done several episodes that you can actually look at, why he's doing what he's doing, but there's no strategy behind it. He wakes up every day and there's this announcement by several of his, aides, secretaries of trade and all that, and they go on CNBC, CNN and all that, but there's some discordant tunes as to what exactly they are looking for and what they want to achieve. So as an investor, now this is what matters to you. You need to actually not follow the chaos strategy of President Trump. You need to actually have your own strategy to play with. How you are going to do that is actually why I'm doing this video. Also, investors are still tiptoeing. You can actually see that there was a lot of sell-offs, which means the big money bags on Wall Street took out a whole lot of money. They're putting it on Treasury, which is the bond in the US. That was why the rate on the Treasury yields actually went down aggressively in the last 1 week. But they are not necessarily coming back with a whole lot of cash to run out of these stocks. Because of the fact that the market is still unsure. They don't actually see that the government has a strategy, which is causing a whole lot of uncertainty. However, you need to actually have your own strategy. If you don't have a strategy as to how you're going to tame the chaos in the market to your own advantage, you are actually going to be selling when you should not be selling. You'll be buying what you shouldn't be buying, and at the end of the day, when the dust settles, you either be holding the bag of stocks or assets that are not going to be worth much, or you are going to actually lose out totally because the market will actually run so fast, and you are actually going to be buying expensive prices or expensive valuation. Now, here is the bonus and the meat of my episode on this rebound. It is a rebound that I feel is complex but also simplistic. So if you look at all the episodes that I've done over time, I said nothing new is actually happening. There's nothing that has changed about the fundamentals of these companies that we are, that a whole lot of people are selling off. So many of these companies even did better than expected in the last quarter of last year, fourth quarter, and many of them are likely to do far better than what they did in fourth quarter last year by the first quarter of this year, which the result is going to be coming out in the next 3 weeks or less than 3 weeks. So what should you be doing? I have 3 stocks that actually sold off, not necessarily because the companies have done anything wrong, but because of just the pervasive negativity, the chaos out of the White House, and the uncertainty that came with it. So I'll be talking about these 3 stocks and why you should be looking at these stocks as opportunities to position yourself, especially when the rebound is now confirmed. So come with me. So here is Google, which is Alphabet. The parent company is called Alphabet. This stock has seen one of the most unexpected, one of the most very very negative downturn in the valuation of this stock. Actually, it's the cheapest stock or mega cap company in the Magnificent Seven on Wall Street. Year to date, this stock is now down by almost 12%. in the last 6 months, this stock has really sold off to the extent that it's only managed to have done, with the rebound of today, just about 8%. So in the last 1 year, Alphabet actually, has almost lost more than, 60% of what it gained in the last 1 year. So if a mega cap stock like this, that despite some of the challenges the company has, is sold off to this point, to the extent that it becomes the cheapest stock, the cheapest mega cap stock on the Magnificent Seven. This is an opportunity to actually buy into this stock. I don't necessarily own this stock, not because it's not a buy for me, just because I actually opted for the Nasdaq 100 index, because I wanted to actually have, exposure to the larger tech sector, which has sold off aggressively. I've talked about the Nasdaq 100, that this is also the best time to buy the Nasdaq 100, because of the fact that the whole lot of the sell-off in the last couple of days has really affected the tech ecosystem, the tech part of the market. The next stock I'll be talking about is yours truly, Apple. So Apple year to date has even seen more sell-offs than what Alphabet has done, despite the fact that the valuation of Apple is a bit not overstretched, but it's a bit of a premium positioning. Apple still remains the stock to beat. Apple has its own challenges with the very lackluster rollout of Apple Intelligence, which is the AI proposition of the company, of the entire Apple ecosystem. But I believe, just like what we saw with Alphabet, that they had very slow, very uncoordinated introduction of their AI products. I believe Apple has what it takes to refine their strategy, and should all the uncertainty that we have in the market start clearing up, President Trump gets a grip of what exactly he's doing, and perhaps even calls off the tariff war. Apple has what it takes to actually reclaim all what it has lost in the last 3 months, and this stock has what it actually takes to retain the position of the most valuable stock on Wall Street, or in the world, if you may say so. The last stock that I'll be talking about is actually one of my favorite stock, if not the most favorite stock, Palantir. So now here is a disclaimer. Palantir represents well over 50% of my portfolio. Palantir's market cap or valuation, if you may, is not necessarily overvalued, because the market actually decides what is overvalued, what is undervalued, what is fairly valued. And sometimes what the market applies to the valuation of a stock is a combination of so many things. Palantir, to an average person or someone who never bought the stock, doesn't like the company, or believes that they missed this stock, they will say it's overvalued. I agree with them to an extent. Yes, on the black and white valuation PE ratio theory that we know with valuing company, Palantir is overvalued. So I take that. Now, to the people who believe Palantir is a company that looks like Amazon or Salesforce about 10-11 years ago, I see this company continuing to actually extend its valuation between the medium to the long term, because what this company has to offer is actually very different, very unique in the AI ecosystem. They actually allow companies to build AI application, to develop AI, to deploy AI, to embed AI into the fabric of an enterprise by tying up every data sources, both legacy, new, old, or even systems that are not even yet built, and they can actually make decisions build better, faster, easier, and more efficient applications, or make decisions at the speed of light, either on the battlefield or on the factory floor, or or in the boardroom. So they have the ontology, which is actually unique, and that's why today, because of the rebound that I said, it's not fully confirmed, they are doing way over what other stocks have done. This stock in the last 1 month actually lost almost 40%. But if you can actually see what's going on now, is that this stock is likely to continue to have an extended valuation. I wouldn't want to jump into the conclusion of overvalued valuation, or overvalued market capitalization. I will actually say is extended. So how do you play this kind of stock? You don't run after the stock. You actually take the opportunity and buy your way into the stock over time. Whenever there's a pullback, whenever there is a general volatility to the downside, that's the best time to buy the stock over time. So if you want to actually take a position in the stock, maybe you should have done that in the last few days or in the last 1 week, and not necessarily run after it now that today is on the rebound. I don't actually believe that we are out of the waters with the tariff war or chaos that is going on, but I believe that having the stock on your radar, buying it over time when there's an opportunity to the downside, might actually be a better way, because when it comes to the AI race, this company has what it takes to be at the forefront, or as a matter of fact, as the driving force of embedding AI into everything we do, especially for big corporations that actually decide the global economy, what we buy, what we eat, and how we actually live our life in the modern time. So that's actually my episode for today. If you have enjoyed everything, or you've learned one or two things from what I've done so far, what I've said so far, yes, you have to do your own due diligence, consult your financial advisor if you have to. But if you have enjoyed everything, or you have some knowledge that you have gained, please subscribe to this channel, put on a notification bell so you don't miss the next episode, which once you subscribe and you put on a notification bell, you actually get an alert to actually see what exactly that is new or very refreshing that we are bringing your way. So the market will still open tomorrow. I still don't believe that we are out of the blues yet, but for me it's a wait and see. But what am I doing? I'm actually taking the opportunities and not necessarily focusing on the chaos and over analyzing or analyzing. Nothing has really changed. If you look at the S&P 500, the Nasdaq 100, they are still very, very successful indices that showed that the market, even if it gets beaten down in the short to medium term, in the long term, 2 years, 3 years down the line, the market regains all the losses, redirects risk, and actually breaks new boundaries, breaks new record to the upside. Thank you so much for watching. Till tomorrow, or whenever we actually bring up another episode, keep investing and keep growing. Take care and bye bye.